What's going on, guys? Zach, Spence, and also our analyst Nick here, bringing you guys a market prep watch list prep CPI watch list prep this evening. Let's get right into it. So we had a really big CPI report. It came out 9.1% year over year. That's the highest we've seen in 4 decades. So that's obviously not a great headline to have. As you can see here, we had a lot of price action. First, we pumped up a little bit. Then we came all the way back down to 11.5. That was a 4% candle, a 4% 5-minute candle that we had. And then throughout the day, we actually retraced back up to this 11.865. We'll take a look at Qs here in a second. 11.865, where we actually hit our supply zone and then pulled back about halfway through, or halfway of that move, another 2% down. Still ended up on the day just barely on a lot of stocks. Some stocks actually ended up having a really nice daily candle, even though we're in a pretty bad spot on a lot of stocks here. So let's just get into it. Let's go to QQQ. I'll show you the QQQ look because not everybody looks at NASDAQ. Bear with us that my computer is lagging just a tad. So bear with us here. However, you can see that once we zoom in on QQQ here, that big came all the way up basically to 290, rejected, then came all the way back down to 280. So a whole $10 candle. That's really ridiculous. Obviously 9.1% was more than we were expecting. We were expecting 8.8, so we got 0.3% higher on the year over year. And the month over month was high as well. Even CPI less food and energy was still higher than expected as well by 0.1% month over month. And I think it was on par with our year over year. So that's not necessarily very good to see. Tomorrow we have PPI. So a couple of things about this, right? So we got really big CPI report that came in, really big read. That's obviously not good. That's indicating that we haven't seen the end of inflation yet. There's a lot of people that are saying, oh, maybe this is going to be the inflection down in inflation. One of those people being Jim Cramer, who, if you're even remotely in the markets recently, I'm sure that you guys have recognized that he's more of an inverse indicator than anything. So him being in favor of this being the highest that inflation is going to be, we're actually going to see an inflection point here, is not a very good thing to hear, because that means that, by his logic, that means that we're not inflecting here. So that's something to keep in mind. One thing that could show us that this isn't the end of the high inflation is a bad PPI report tomorrow. That comes out at 8:30 in the morning, and we're expecting, we're expecting less energy and food. We're expecting 0.5%. The previous was 0.5%, and then 8.2% on the year. Previous was 8.3%. So we're expecting a little bit down on the year, but the neutral month over month. And then with energy and food, we're actually expecting the same exact month over month and just a little bit under on the year over year, which I think is way too conservative. I think that we'll actually see a little bit higher of a number there. So that's not very good. And if we get that, that's going to confirm that this is definitely not the end here. So going through this, one thing that we got out of this that was really interesting is that we've got now an 80% chance of a 100 basis point hike in July, which before we were pricing in 75 basis points, but now we got 100 basis point at 80%. And then we've also now got a 50% chance plus, of a 75 bips hike in September, which wasn't even remotely talked about. A 50 bips is what we were pricing in before. Now it's 75 bips over 50%. So that's something to really important to pay attention to as that percentage increases of the 75 bips in September. We have not priced that in yet. The market hasn't priced that in yet. So as we see that continuing to take an effect on the market, it should bring us down as well. Let's see. Let's move forward right onto the trades here. Honestly, we've got a few trades from myself, a few trades from Spencer, and a few trades from Nick, where we'll be looking at some indices and some individual stocks as well. So my first stock that I want to take a look at here is Airbnb. Again, bear with me as the chart loads. So Airbnb has been struggling, like a lot of tech in this, these past couple of weeks, bounced up, at least saw a 10% bounce, but Airbnb has been down. It really struggled after it broke this 100 level here. It broke underneath it, and now it really just can't get back above it. You can see we come up and tap 98, come up and tap 98, come up and tap 98. We just fail it every single time. So there's definitely some weakness here. So if we're going to have a high PPI report, we're going to have weakness in the market. Airbnb is an amazing culprit for some shorts. So if we open up underneath this 93.75 zone, I'll be looking for supply shorts at the 93.75 zone or below this 91.70, whichever one comes first. And I'll be taking it all the way back down to this 89 realistically speaking, if you had longer dated contracts, you could take it even below this all-time low. If we were to open up above and actually get a good PPI reading, I'd just be looking for this 98 level for another rejection in short. It's going to have a really, really difficult time breaking that 100 level. So eyes on that 98, 93.75, and that 91.79 level. For the contracts, I'm looking at, I believe, I was looking at 93s. Once a price loads here, the really, really cheap contract. There is going to be a spread on it, always a spread, about a 20-cent spread right now, but that might widen or tighten. So you might want to try and get filled on the mid there, but these are really cheap contracts. 93 put weeklies is what I'm looking at. Let's keep it moving here. I'm also looking at CRM. So if you guys remember, I talked about it on Sunday. I talked about it last Wednesday. This is a trade that we've been looking at for about 5 days now. We actually traded it yesterday for a nice 168%. We took the contracts from $1.22 to $3.20. It was a really, really great trade. If you want to see the recap, it's actually on our YouTube, and I'll link it down below. So check it out in the description below. We had the overall price target of 162, or excuse me, lower than that. 155 was our overall lower price target here. Obviously, that's a big fall. We said that it would take multiple days to get there. So these are the next few days. Over the next few days, I'm looking for CRM to trend in that direction. So if we were to open up under this 164.61, which I do expect us to open up under here, I'll be looking for shorts. If we were to push back up into this 164.61 zone, looking for shorts there, or underneath this 162. It's a very simple trade. Take profits along the way with a minor stop at 159.50 to 160 here as the zone. Underneath there, you really don't have much saving you until 155.70. This is a great trade. Like I said, we hit it for 168% the other day, and that was very nice. So looking to take some more off the table here. I was looking at these 160 puts, or if you wanted to buy in the money, you could buy the 165s, but I would stick with the 160 puts. I wouldn't go any further out. If you do, make sure that you're really close on that half point, even though the half points will generally get less volume. But with that being said, I'm going to toss it to Spencer. He's going to go over some of his trades now.
Let's look at Tesla first. What's going on, guys? So Tesla, very, very interesting. We saw a big, steep drop off in that morning time, back down to that 680 range. What we're looking for on Tesla is either direction it wants to go. I'm looking for my first stop down towards the bottom side around 702.39. 2 spots below that, 681.79, 668.55. So most likely we get to that 700 range. I'll be looking to take some 675 weekly puts. That being said, if we're going towards that top side, staying over this 700, as we approach 716, I'll be looking at 723.21 and also 734 as ultimate top side, just depending on either way it goes. Now Twitter did put in their lawsuit with Tesla, so this will be going through, and they're looking to get the whole $54. So I see in the long term that Tesla could take a hit, being how long this gets projected out through September. So we did open up some 600 puts for January, just trying to capture this downside if this deal does go through. My next trade is TSM Earnings Thursday late, so we'll pull that up now.
Oh, hold on. Yep.
TSM's a really interesting movement. We did see some green flows come in late during that day. We were trading the 84 contract weeklies. It did go from 54 cents up to $1.08, settling back down around that 85 cents. If you're not in this trade currently, I'm looking over 81.20 to continue towards that upside. Still playing those 84s, a lot of volume on that. If we do break below that 80.08 level, I will be looking at those 74, but rolling out till next week. So that'll be one to keep your eye on with earnings coming later in that day. So you'll be looking to play some same day expiries on those 715s. Last but not least, I want to go over Roblox. Roblox has seen a lot of volume. It's definitely a fun one to trade, especially with the contracts and the volume. Pretty simple here. We're looking for a 36.01 break towards that downside. I'll be looking at some 35 weeklies. Or if Roblox can get over 37.52, I'll be looking to take it up over to those 40 calls somewhere in the following week. And with that, I'm going to pass it over to Nick to go over a few of his trades.
You know, flip over to oil or IWM first. You can look at USO. I also want to look at the /CL, the crude oil chart as well.
Okay, USO first.
Yeah, we can start with the no, go to crude oil first. I just like the chart better, even the long-term one.
Okay.
Had some wonky price action in this lately, right? We finally kind of got sub $100, even without any, ceasefire news coming in, right? We still have this war going on. I don't think we've had a lot of demand destruction just yet, and we're still having a supply problem. So close eye on this price action here. Anytime it's going to be sub 100, I want to watch this. You have your 200 SMA. I believe it's like 93, 95, right around that area where we're sitting right now. I could see some small, we did swing the USO 75 calls here. Could see some small pain into that 170 area, which would make me either cut it quick at open, depending on where we opened, and jumping into a 75 with longer time. But I really think we have to back test that 100 level if you're talking about crude spot price. And we go over to IWM here.
IWM, longer time frame.
Yeah, let's start big and get small. The reason this really has my eye here, you had that double top. If you look at 2018 there and then your 2020, right? So you're sitting right on top of that zone. Not a ton of great price action here, but as me and Spence were kind of just talking, at what point as a long-term buyer do you start averaging into this? I mean, anything sub 160 has to catch your eye. I'm just as bearish as it looks. If you go back into a smaller time frame here, it looks bad. A strong relief rally just wouldn't shock me here, especially with that POC overhead. I know we had that double top rejection there of it, but it's something I really want to watch here, whether we break under that 167.5, right, where you kind of lose that liquidity zone there. You could play that break, but I would be very watchful of a big bounce in here. And again, as a long-term buyer, this really has my eye.
Just to back Nick up, I was looking around like 165 come September latest. We're looking to pick up some shares. Really, when it starts touching that 163 area, ultimate downside, Nick and I were looking at this, looking about 154. But if you're just saying that long-term, in that long-term mind frame that you got to think, just start averaging in 5-10 shares at a piece. When it gets towards that 164, 163 zone, that's when you start nibbling down. I can see that 150s as like your ultimate low, but that's even there. It's just super overextended.
Yeah, and you just said that 155. I mean, look at this chart here. What is this, a 5-year 3-day? Look at your POC, 154.97. So, I mean, certainly possible, but again, if you get to that POC, you have to start thinking of at least nibbling into this. IWM is, I mean, a lot of people talk, it's actually a decent inflation hedge. I know it sounds insane, but it's true if you look back in the.
This is very true. So with that being said, we're going to wrap it up here because we actually have to do the live prep version where there's more plays. In this version, we only give a few plays, but we actually do come with a lot more plays inside of our live market prep version, which is hosted 2 times a week inside of our Discord, which the link will be in our description, Sundays and Wednesdays at 9 p.m. Eastern. We got a little bit of a lot of different things. We got some day trades, we got some longer term trades, and we got some longer term share buys from Nick coming in. Hopefully you guys liked that and really enjoyed that. Like I said, there's lots of links in the description to check out, one being the recap video from the CRM trade that we took the other day that was posted yesterday. Check that out. Feel free to check out the watch list. We do post the trades that we talk about in the video inside of the description. So if you didn't catch everything, because we do talk fast sometimes, it'll all be in the description there. And of course, please leave us some feedback if you could in the comment section, what you liked, what you didn't like, what we need to start bringing to it, or what we need to do more of. Please, just feedback is very helpful. And if you like us enough, please send us a like and a subscription because it really helps us out. We're a smaller channel. So with that being said, we'll talk to you guys later. And the people that aren't in our Discord, feel free to join it. Like I said, we have live market prep sessions where we go over our entire watch list, which is much more than this. I personally got 6 trades. Spencer's got 9 and Nick has like 5. So that's a lot more than we went over today. So like I said, you can find that link in the description. And with that being said, we'll catch you guys next week.